Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, our team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price moves and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Okay, everyone, welcome back to another exciting week in the crypto markets. It has definitely been a bit of a roller coaster the last 10 days. Market went up at the beginning of the year and then down on the macro trade. Everybody's been watching all of the macro data again, of course, like PPI numbers. CPI came out this morning and a lot of the market has rallied around that. We'll see if this continues up or down. In addition to that, we have got Trump's inauguration on Monday this week, which a lot of folks are watching, especially as there are now promises that potentially on day one, there will be some crypto regulation signed into law or signed in via executive order. Some other interesting things going on is Sony, a Sony electronics company, launched their L2 called Sonium this week. They had definitely had some hiccups though. They're also interesting was Tether, the biggest stable coin at they're at about 200 billion of an AUM. They relocated to El Salvador. But we got some tokens to talk about as always, so we shall get right into it. All right, so first up, I've got Thorchain. This is a bit of a doozy, so I hope you guys are kind of ready for this. So if you're not familiar, Thorchain is a cross-chain swap protocol or like DEX. And they have a DeFi platform called Thorfi, and this week has been a little rocky. They saw an emergency shutdown last week and a mutiny among the network's nodes. So Thorfi is a lending and saving protocol. They basically offer an interest-free lending product with no liquidation risk for borrowers, which obviously sounds too good to be true, and maybe we will see. So basically how it works is that when a user deposits collateral to Thorfi, for example, Bitcoin or ETH, that collateral is immediately sold and then it's used to purchase Thorchain's token RUNE off the market. That RUNE is then used to buy the borrowed asset, whether that's like USD or say another altcoin. And the idea is that so say you pay $100 of you're borrowing $90 of, or say you're borrowing $50 of stable coins, USD, you're going to end up putting in collateral for like $100 worth of Bitcoin. So what happens is that you sell, the protocol sells that Bitcoin for RUNE. That $100 is then taken, $50 is used to purchase USD stable coins and given to the borrower. The other $50 of RUNE is burned and removed from circulation. The idea here is this is a way to act as a supply sink for the RUNE token. So then the opposite happens when you go and redeem. They mint the RUNE from thin air. They use that to buy back whatever collateral that you had for your loan, and then they give that back to you. So this works in theory, right? As long as the price of RUNE is pretty much steady or going up against the price of whatever collateral is. In most cases, collateral used is Bitcoin and ETH. So again, this works as long as RUNE, the token, is going up in lockstep with Bitcoin ETH or outperforming it. Now, if there's a mismatch in this ratio, right, RUNE is going to be minted to make up any shortfalls. So what has happened is that the price of RUNE has basically not been in lockstep with Bitcoin and ETH over the past several weeks. And as a result, what has happened is that redemptions from Thorfi, as the price of RUNE has declined, redemptions from Thorfi have increased, which has created more minting of RUNE, which is weighed further on the RUNE price. And it just kind of creates this flywheel, which exacerbates the problem, right? So then more people say, oh, shoot, the protocol's under collateralized. We have to redeem faster. More Thorchain tokens get minted, and you're just kind of in this downward death spiral. So that was kind of the worry and what a lot of folks on crypto Twitter were kind of raising the alarm bells on about a week ago. So what ended up happening is the Thorchain founder and developers decided to use an emergency shutdown protocol to pause Thorchain and Thorfi while they figured out a solution to this problem or to this liability mismatch. Unfortunately, a lot of people did not like this. They said this was supposed to be something that was only used for external threats. It wasn't supposed to be something that was just used to pause, issues or potential liquidity problems in our DeFi protocols. So the nodes on the Thorchain network went out and basically turned back on this emergency shutdown and said, we don't want to use this anymore. And now the big debate has actually been more about not that we have this maybe under collateralized lending protocol, but we have a centralization risk and it wasn't properly used. So there's definitely, like I said, been a lot of back and forth. And basically all that's been decided since then is the developers have agreed to remove the emergency shutdown feature. And more recently, Thorchain's founder, JP I can't actually pronounce his last name, but JP has announced that he will be stepping away from the project due to personal matters. So bit of a whirlwind for Thorchain. They basically full fix for the protocol hasn't really been created yet. They're planning on spending the next several months kind of overhauling their DeFi protocol. But in the meantime, the folks who are more deeply involved in the ecosystem claim there are plenty of levers to pull in the meantime to make sure that the protocol does not become insolvent and RUNE does not fall into a death spiral. Despite this, RUNE is down about 12% for the week. Okay, next up, we're going to talk about Mantra and their token OM. So Mantra is a layer 1 protocol. They're actually focused on the real world asset space, or RWA for short. And they made some headlines this week. They announced a partnership with DMAC, which is one of the largest broker-dealer groups from the UAE. So DMAC is actually going to tokenize, part of this partnership, they said, we're going to tokenize $1 billion of assets in our portfolio and put it on Mantra's blockchain, which is super cool. So although the OM token's been actually around for a few years, the protocol has only recently launched their chain with plans to bring kind of assets to the chain. The protocol currently has about 3.86 million in TVL, so really not much. But they've got a lot of other partnerships that they've previously announced in the real estate area and with some DeFi protocols like Ondo. And so we can potentially expect to see this grow in the near future. With that, OM was pretty much in line with the market. It is down 3.5% for the week. Okay, next up, I'm going to talk about Maple Finance. On Monday, a proposal went live on Maple Finance's governance forum to initiate a token buyback program. So for those not familiar with Maple, they've been around since I think about 2020 now. They are I kind of call them like a CDFI protocol. That's a newer term, which is they have some features of a DeFi protocol, some features of a more centralized protocol, but they basically are kind of offering lend, borrow, or loans out on the more institutional end of the spectrum. So while their borrowers tend to be more institutions, high net worth investors, their lenders are more on the user retail end. So the idea though is that they offer a lending product that is fully on chain, but still kind of adheres to some things that institutions might want, such as custody, which you can't necessarily have on Aave, right? That's got to be all on chain. While they also offer fairly competitive yields versus the rest of the market. So Maple is, like I said, the protocol has grown significantly over the last year. Their TVL has gone up by about 470%, which is super impressive. And the protocol at the end of last year began migrating their MPL token, their Maple token, to their new Syrup token. So that process is still happening. But the proposal essentially is pushing or a proponent of taking 20% of Maple Finance's Q1 revenues and using it to buy back Syrup tokens on the open market and distribute it to Syrup stakers. So like many protocols, if you hold the Syrup token in order to participate in governance and to earn staking rewards, or any potential, in this case, token buyback rewards, you have to stake your token through the protocol. You can't just hold it passively. And so this is kind of designed to really offer an additional sweetener. So stakers already earn inflation rewards from the protocol. And like I said, they receive these governance privileges. So this added yield, which the proposal estimated is going to be about 5% annually, is just going to be another kind of kicker. The buyback pressure also good for the Syrup token because it'll mean buy pressure of it on the open market. The proposal is going to be up for about the next week. And after that, it will move to an official vote. So we will see how that goes for Syrup. Unfortunately, with this, they're still down about 1.5% for the week. All right, that's all I got for you guys this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.